Greetings to our followers. This is still Fidèle BizFord. Those who want to follow us on INCO class point, there on the top right is a code to follow us on the INCO class point. So still we are going to continue with the unit 1 of senior 6 entrepreneurship, which is ledgers and trial balance. Unit 1, ledgers and trial balance. Then the trial balance is defined as a financial report that lists all the balances of ledger accounts at a specific point in time. Of course, it shows whether the informations as per the source documents, as the way they are recorded in the books, are true and conform to the reality. All the information are true and conform to the reality as they occurred in the business. So the trial balance always has a debit and a credit column which should agree. If they don't agree, you just recheck the process and see if you did not make any error during the time you recorded, or an accountant, your accountant, if you own a business. If the accountant didn't make an error during the time he or she was recording information in the books, in the financial books of the business. So a trial balance can also be defined as a list, simply as a list of the debit and credit balances are extracted from the ledgers at a particular date. Here are 10 significant uses and importance of a trial balance. Number 1, verification of ledger accuracy. The trial balance confirms that all entries in the ledger are properly recorded, ensuring the accuracy of the double entry system. Number 2, revealing total assets and liabilities. The trial balance provides a summarized view of the business's total assets and liabilities, aiding in financial assessment. So the trial balance is very important because it shows you the types of assets, because remember, when you're preparing the trial balance, you prepare it after ledger, and ledgers are classified in a way that when you prepare them, you know the assets account, the liabilities accounts, the equities accounts, you know the expenses accounts, all these types of accounts, for you to know where you will record information and in which side, whether debit or credit. Number 3, the significance number 3, the trial balance serves as the basis for the financial statement, because the information from the trial balance is used to prepare the financial statement, like income statement, which is also known as a statement of financial performance, and the balance sheet, which is also known as a statement of financial position. For preparation of profit and or loss assessment, the trial balance lays the groundwork for calculating the net profit or net loss of the business by summarizing revenues and expenses. Number 5, ensures reliable financial data. The equal totals of the debit and credit columns confirm the reliability of the financial data. Detection of arithmetic errors. The trial balance helps easily spot and correct any arithmetic errors in the transaction or postings. The trial balance improves decision making by summarizing the financial position. It supports management in making informed decisions. The trial balance streamlines audits. It serves as a preliminary document for auditors, simplifying their review process. The auditors follow all the accounting cycle, and trial balance is part of the accounting cycle. And by checking the trial balance, they can easily trace whether there was no misappropriation of accounts, which takes them back to the ledgers and the journals. Trial balance ensures compliance with accounting principles. A trial balance reflects adherence to fundamental accounting principles such as the matching principle, the significance number last but not least. The trial balance facilitates month-end and year-end closing. It simplifies the process of closing accounts by ensuring all transactions are accounted for accurately. We have a number of steps that one follows while preparing a trial balance. Step number one is posting all the journal entries to their respective ledgers. Posting all the journal entries to their respective ledgers. Number two, balance of the ledger accounts and determine the credit or debit balances for each ledger account. Step number three, you list all accounts with their debits and credit balances, ensuring that debit balances are in one column and credit balances are in another. Step number four, you sum up all the credit balances and you do the same to the debit balances. Then step number five, the total of the debit balances, you make sure you check the arithmetic accuracy, whether the debit balances totals match the credit balances. Then if you find that they are not equal, you will check the process to identify and correct the errors. Of course, it will take you back to the ledgers to cross-examine whether there was no error made while posting journal entries to ledgers. We have three types of trial balances. We have adjusted trial balance, unadjusted trial balance, and more. So there, we shall kick off with the adjusted trial balance. This is like the first draft of your financial records, and it is made before any correction or adjustment are done at the end of the accounting period. This kind of trial balance shows the balances of all accounts directly from the ledger. Mistakes or missing entries might still be present at this stage, at this kind of trial balance, and it's used at the starting point for checking and making adjustment. An example, if you haven't recorded the rent payment for December, of course, it won't show in the unadjusted trial balance yet. The second type is adjusted trial balance. This is an updated version of financial records, and it is done after all necessary corrections and adjustments are made. This includes adjustment like unpaid bills, which is a part of accruals, then the prepayments. It gives more accurate picture of your finances, and it is used to prepare the final financial reports like the profit and loss statement or even the balance sheet. An example, to make it more clear, if you earned interest but haven't received it yet, this adjustment will be included in the adjusted trial balance. Then we have the post-closing trial balance. The post-closing trial balance is the final version. It is the final cleanup of your financial records after the temporal accounts like income and expenses have been cleared out for the new accounting period. This one shows permanent accounts like assets, liabilities, and equity. And it is used to check everything is balanced. It's used to check whether everything is balanced and ready for the next accounting period. An example, after closing income and expenses account, only accounts like cash, loans, and retained earnings will appear. Easy way to remember the three types of trial balance. We have unadjusted trial balance. This is a rough draft and it is done before corrections. Adjusted trial balance, this is the polished version and it is done after all corrections. The post-closing is the final cleanup and ready for the next period. The trial balance format, if you remember it very in our previous sessions, it has got three columns. The first column is of details, account or account titles, or account names, whatever you like. Then the second column is of debit, and this column accommodates all the debit balances from ledgers. And we have lastly the credit column, which accommodates all credit balances from the ledgers. Finally, we compute the totals. The totals are to be computed, and you have to make sure that debit and credit totals, the amount on debit and the amount on the credit columns, tally. If they are not equal, you have to recheck the process. We have the rules for debiting and crediting accounts. It's not just done out of nowhere. There are rules. For the assets accounts, anything that falls in types of assets, you have to debit when an asset is increasing. I'll give you an example of purchasing of an equipment or increasing in cash. When you purchase an equipment, you are increasing the equipment you have. And an equipment is a type of asset. Any equipment, be it an equipment that is helping you in an organization, in the business. So if it's an equipment that you purchased, you are increasing assets and you have to debit. Or if you have received the cash, you are increasing the cash, and cash is an asset for the organization, the current asset. So you have to debit that account, the account. You debit the cash account or the cash book. You credit when an asset is decreasing, and this rule is universal. You debit an asset when it is increasing, and you credit an asset when it is decreasing. I will give you an example of a sale or disposal of a fixed asset or any asset, or the cash payment. If you have paid cash, be it for bills or for what, or it might be in any form. So any payment of cash reduces the asset cash, and any sale of asset reduces the number of assets you hold in the business. Two, liability accounts. You debit when a liability is decreasing and credit when a liability is increasing. Debit when a liability decreases, example, repayment of a loan. When you are repaying interest on a loan acquired from a bank, you have to debit the loan account, that loan account, because you are decreasing the amount of money that you owe to the bank. Credit a liability when a liability is increasing. Credit a liability account when a liability is increasing, like when you're borrowing money or accruing expenses. When you borrow money, you are increasing the liability you owe to the bank, so you have to credit that loan account, that liability account. Three, the third rule, the equity or capital account rule. You debit an equity or capital account when an equity or capital decreases. When equity or capital decreases, you have to debit. The owner's drawings or the withdrawal or losses. Any kind of withdrawal or any loss, or you've made some drawing, you have to make sure you do what? You debit the capital. You are reducing the capital, the equity that you have. You credit when equity is increasing. An example, additional capital contribution or profit. If you are partners and you are adding, you are increasing, or you are just adding the capital contributions, or it is a retained profit, you have to make sure you have credited the equity account, because you are increasing your equity or capital. For revenues and income accounts, you debit when revenue decrease and credit when revenue increase. Examples, debiting revenue when a revenue account has increased, reversals or refunds of previously earned income when there was an income earned and you want to reverse it. Reversing it, of course, you will have to debit. You will have to debit. Then credit when revenue increase, like when you've made sales. Sales are part of revenues. When it's sell, you are selling, of course, the sales account will have to be credited because you are increasing revenues from sales. Rule number 5 for expenses account. You debit when expenses increase. Example, payment of rent, wages, or utilities. You credit when expenses decrease. An example, the adjustment or refunds for overpaid expenses. When you overpay the expenses and you want to reduce or adjust or just receive refunds, you make adjustment or refunds for the paid expenses that push you to credit the expense account. Transferring ledger or account balances to the trial balance. Of course, we have the debit balances and the credit balances. The assets and expenses typically have debit balances and are listed under the debit column in the trial balance. All assets and expense account will be debited. They will have the debit balances and will be listed under the debit column of the trial balance. Credit balances, all liabilities, capital, equity, revenues, and all types of incomes have the credit balances and will be listed under the credit column of the trial balance. And if the trial balance does not agree, if the total debits and total credit do not agree, the errors in journal entries or postings to the ledger must be identified and corrected. We have an example here. The following information was extracted from the books of accounts of Jean Paul as at 31st December 2012. The cash was 9,500, salary 1,000, machinery 4,500, capital 18,000, sales 9,600, purchases 7,600, stationery 3,000, rent and rates 2,000. And here is a question. We are required to prepare Jean Paul's trial balance as at that 1st December 2012. Of course, we shall have the accounts, withdrawal accounts here. We shall have accounts before this, but we are required here to prepare the trial balance. The trial balance, as you remember, it is made up of 3 columns. The first column is of account titles. The second is of debit. The third is of credit. You remember that all assets and expenses account have debit balances. Automatically, cash is an asset. It has to be listed under debit. Salary. The salary is an expense to an organization, and an expense, remember, is listed under debit. Machinery, this is an asset for the organization. An asset is listed under debit. Here we have purchases. Purchases, you bring goods to an organization, so this make part of asset. It is listed under debit. Then we have stationery. Stationery, It is also listed under debit because it is an expense. Rent and rates, this one is also listed under debit because these are expenses. Stationary, rents and rates, these are expenses. Capital, remember capital incomes, revenues and liabilities all have credit balances. It will be listed under credit. Sales, this is a revenue and it will be listed under credit. Then finally, we have to compute the balances. We compute the balance on the debit. The totals of this is 27,600. Please take your calculators or use your heads to confirm whether this conforms to the reality. Then credit balance also has 27,600. So the debit and credit columns of the trial balance agree. We do not need to check whether there is a misclassification of this information. We have an example, second example. The second example said that Mr. Munyakuli, a trader in Igasavu district, started business with capital in cash, in cash of 5 million Rwandan francs on 1st November 2022. Thereafter, the following transaction took place. He used this 5 million to do the following. On second, bought furniture of 200,000. Fifth, cash sales on 500,000. Eighth, purchases of 700,000. 10th, paid repairs 220,000. 15, got a loan from the bank 5 million. 26th, bought a motor vehicle 2,500,000 Rwandan francs. Then we are required to open up the necessary ledger accounts and prepare the trial balance. We shall open the ledger accounts. We shall open the capital into this very first transaction. We shall open the capital account. We shall open the capital account. And we open what? We open the cash account. The capital account and open the cash account. Remember the structure of the account and the cash account. Never you forget debit, credit, and all these details. So the following will be which account shall we debit, which account shall we credit. Remember, cash is asset and capital. We have two types of account, the capital account and the asset account, which is cash. So we shall start with cash account. We are starting the business. Of course, we shall debit cash and credit capital. Debit cash, and in details, we put here capital because the corresponding account is capital, 5 million. Then we credit capital. We credit capital with 5 million. We credit capital with 5 million. This is the very first transaction. If you want, we can even balance off all these transactions, but we need to wait until when we realize that we do not have any effects on these accounts that we have already drawn for our records. The second transaction, on second, we have furniture accounts. The furniture accounts, what happened on this furniture accounts? Bought furniture. When you're buying, you pay. So furniture, this is an asset. So bought furniture, you pay cash. So we shall credit cash account and debit furniture. Debit furniture, we debit furniture and credit cash. We debit furniture and credit cash. We debit furniture and credit cash. debit furniture and credit cash, with furniture in the details, with furniture in the details. Then we go back. This one is done. We debited furniture and credited cash because cash is paid. Now cash sales. We sold goods and they gave us cash. So we are increasing the asset cash, but at the same time increasing revenues. So we shall have the sales account. We credit sales account, and debit cash. Credit sales account and debit cash. We indicate sales in the details, 500,000. Then we go back on 8th, cash purchases, 700,000 cash purchases of this. So we purchased things and we paid cash. So we debit purchases and credit cash. We go to the purchases account, we debit the purchases, and credit what? And credit cash. Debit the purchases and credit cash with 700. Remember, the same amount has to be reflected in two accounts. Then we go back to 10th. The question is telling us that paid, Mr. Munyakuri paid for repairs. This is an expense. So we debit repairs, credit cash. Debit repairs and credit cash. Yes, with the repairs. Then we go back. This is done. Got a loan from KCB of 5 million Rwandan francs. This is a loan we got. We are acquiring loan, which means we are increasing the loan account. This is a liability. We are increasing loan account, but at the same time increasing the cash in the business. We shall credit loan KCB account and debit cash. Loan KCB account and debit what? And debit cash, because we are receiving the money. We are receiving a loan. Yes, we indicate in details the loan KCB. Do we have any other transaction? Yes, bought a motorcycle. 2,500,000 motorcycle. This is an asset, but cash is out. So we debit the motorcycle, we credit cash. Debit motorcycle and credit cash. Credit cash. Indicate motorcycle in the details column. Then we are going to balance off. We balance off the cash. Remember the steps of balancing off. You first compute the totals on the debit and credit. Then you find the balancing figure by subtracting the small amount from the big amount. So the total, the debit side is greater than credit side. So which means that we shall have this total, the total of here minus the total of here. Then the balancing figure comes to the credit side, which is of 6,880,000 francs. The totals are this, 10,500,000. Then we draw two parallel lines. And lastly, we bring the balance carried forward to an opposite side, which has got a great amount, and we make sure we write it to the next. We write it with the next month, the next date of the month, which is the beginning date of the new month. The balance brought down is 6,880,000. So going to the capital account, we balance it off also. We balance it off. it will be of this 5 million, the balance brought down. This is a credit balance. Then on furniture, we also balance it off. Furniture, we balance it off. We balance it off. Debit balance. Then after furniture, we go to sales. We balance it off. We balance it off at 500,000. We draw two parallel lines, and the balance brought down is this. Then after sales, we go to purchases and we balance it off at 700,000. The balancing figure is that. Then the balancing figure comes to the debit on December 1st, 2022. This is done. After the purchases, we go to repairs and we balance it off. The balancing figure, we don't have anything on credit side. We balance it off at the last date of the month, 30th November, balance card down 220. Then we compute the totals on the last date of the month, totals. Then the balance card down comes to the 1st December 2022, 220. After repairs, we go to the loan account. We balance it off for us to get the balance to take to the trial balance. The balance carried down 5 million on the debit. We compute the totals. Then the balance brought down as this. After this, we go to the motorcycle account. We also balance it off. And the balance comes to the debit because it is an asset. After all this, we are going to prepare the trial balance. The account titles. Remember our rule that all assets, the expenses have the debit balances. Then liabilities, equities or capital and incomes have got the credit balances. So the cash has got 6,880,000 Rwandan francs and has to be listed under debit column of the cash book, or rather of the trial balance. The furniture, its balance was 200,000 and this is an asset, it has to be listed under debit. The motorcycle under debit 2,500,000. Then purchases 700,000. Repairs 220. Sales, this is a revenue 500,000. Loan KCB 5 million. The capital of 5 million, and we have to compute the total, and the total gives us 10,500,000. 10,500,000. Here we have the assignment for you to try and see if you have understood this. And please, if you have any question, type under the comment box below. On 1st January 2013, started business with capital of 100 million in cash and 150. On 10th January, bought goods by cash, 14 million Rwandan francs. 20th, cash sales were 9,000. 21st, bought goods on account from Abertine for 18,000. 23rd, returned goods to Abertine worth 8,000 for they had got damaged on the way. 23rd, bought equipment on credit from Savida Enterprises for 120,000 francs. And on 28th, paid wages by check. And you are required to record all these transactions in a journal. After the journal, you post it to the ledger and extract the trial balance. We have an assignment to enter the foreign transaction in appropriate accounts and balance them in the books of accounts of Bimenya Enterprises Limited. Thereafter, prepare a trial balance. On 1st June 2011, started business with a capital of 500 in the bank. 5th, bought goods by cash at this amount of land. Either different here, different currency. So South African rand. Bought 10 sold goods by this, 15th bought goods from Issa and Sons, all these. Then we are required to enter these information to the appropriate accounts and balance them in the books of accounts. Then prepare the trial balance. So this is the end class. Thank you very much for following us. Please empower learning and transform lives by subscribing to the Fidèle BizFord. Thank you. Bye. See you next time.